The current live price for BIO Key International Inc., that's BKYI, is $1.39.98, reflecting a staggering 79.46% surge intraday as of 11:15 a.m. Eastern Daylight Time on Monday, October 27, 2025. The expectation versus reality of a massive surge. The immediate expectation when you see a penny stock like BKYI up nearly 80% in the late morning hours is that some monumental game-changing contract or buyout rumor has hit the wires. The reality, however, is a little more nuanced, and it's where the deeper analysis begins. While the surge is tied to actual news, it's the scale of the volume, over 216 million shares traded compared to an average volume of around 126,000 shares, that is the true head-scratcher. That kind of volume suggests a major, almost speculative tidal wave of retail trading, possibly fueled by recent positive product announcements and a low float. It's not just a big contract, it's a market frenzy interacting with a deeply illiquid small-cap equity that was trading at $0.78 at Friday's close. This unexpected disconnect between the underlying fundamental news and the hyperbolic short-term market reaction is what we need to break down. The general belief about BKYI is that it's a tiny, perpetually unprofitable identity and access management (IAM) company that struggles with market adoption and maintaining NASDAQ compliance, often resorting to dilutive capital raises. The market narrative paints it as a speculative microcap in a high-growth sector perpetually outcompeted by giants. We have to challenge that. Could this recent massive movement signal a true turning point, or is this just another speculative pump destined for a swift correction? The immediate catalyst for this dramatic price action seems to be a combination of a late-breaking announcement from last week and the sheer low-float nature of the stock. Specifically, the news around the launch of the EcoID 3 USB fingerprint scanner with enhanced security features, coupled with the company's recent showcases at international cybersecurity events like GITEX Global in Dubai and 19 INIS in Spain, is creating a buzz. For a company focused on biometrics and identity-bound biometrics (IBB), new hardware that achieves key certifications like the FBI FAP 20 certification mentioned in the news is a tangible sign of product viability. However, a single product launch, no matter how good, rarely justifies a near doubling of a stock price in a single morning, unless the capital structure is extremely tight and trading is dominated by retail momentum. Institutional activity in BKYI has historically been minimal, and the lack of deep, long-term institutional backing means these explosive moves are often less stable. Today's volume suggests a high degree of retail self-investing, possibly orchestrated across social media platforms, targeting a stock with recent positive news and a very small market capitalization, which currently sits just over $10 million despite the surge. This is a classic volatility signature for a microcap with positive news in a sector with high secular tailwinds, magnified by the current environment where individuals have unprecedented access to markets through platforms like Robinhood and tools like Schwab Intelligent Portfolios for diversified automated holdings. The recent stock movement is a perfect microcosm of the small-cap market's emotional nature. BKYI was trending down until late last week, having traded in a tight low-volume range near its 52-week low of $0.6152. The Friday close at $0.78 was already up slightly, but today's open at $1.90 and the subsequent high of $1.97 indicate a massive gap up that failed to hold its peak, settling back toward the mid-$1 range. This is a crucial detail. The gap up and immediate retracement, even with the current high volume, tells you that initial enthusiasm, likely short covering or quick profit taking, met selling pressure. This suggests that while there's undeniable interest, a substantial portion of the market sees this jump as an opportunity to exit, not necessarily a fundamental reassessment of value. We're seeing a tug of war between the hope for a major technical breakout and the underlying reality of a company that is still reporting losses. The last quarterly earnings report for Q2 2025, which saw revenue jump 49% to $1.7 million, was a definite high point, driven by increased hardware sales and initial traction in EMEA markets, yet the company still posted a net loss of $1.17 million. The market generally dismissed this initial earnings beat because of the sustained unprofitability and dilution concerns from earlier in the year. Today's price action is a delayed, over-exuberant reaction to that improving revenue story, amplified by product news and the low-float dynamic. The larger cybersecurity and identity management sector provides an important context, with companies like NVIDIA stock driving the AI compute that fuels the digital economy. The need for robust, unhackable identity verification is growing exponentially. The sector is moving rapidly toward passwordless authentication, a core service offered by BIOKYI's PortalGuard IDaaS platform. This secular tailwind is the single most compelling long-term argument for BKYI. Macroeconomic pressures such as continued high interest rates and broader market volatility generally punish small, unprofitable companies, making access to capital difficult and increasing their risk profile. BKYI has managed to improve its cash position, reporting $2.3 million in cash as of Q2 2025, up significantly from the end of 2024, largely due to warrant exercises. This provides a short-term cushion, but it also highlights the company's reliance on capital market activities, which usually involve share dilution, something that constantly weighs on long-term shareholders. BIO-key International's business model. At its core, BIO-key International is an identity and access management, or IAM, solutions provider with a specialized focus on biometrics. Their primary offerings revolve around the PortalGuard IDaaS platform, which provides a cloud-based solution for multi-factor authentication, MFA, single sign-on, SSO, and, critically, identity-bound biometrics for secure, convenient, and passwordless access. This is the whole idea behind identity-bound biometrics, using a physical, verifiable attribute that's essentially impossible to phish or spoof. The business generates revenue primarily through a mix of recurring software-as-a-service subscriptions from PortalGuard, software licenses, and the sale of proprietary biometric hardware like the newly released EcoID 3 fingerprint scanners. The company is actively shifting its focus toward the higher-margin, predictable revenue stream of the SaaS model, targeting over 60% of revenue from subscriptions, which is a sound strategic move for any software company. However, the recent increase in hardware sales, while contributing to the Q2 revenue beat, moderated the gross margin, a clear expectation versus reality moment for investors who anticipate pure software margins. They also provide professional and maintenance services, but the real long-term value lies in the sticky, subscription-based software platform, which serves enterprise, government, and education sectors. They've secured follow-on orders from a foreign defense ministry, indicating that their high-security solutions are gaining traction in critical, high-value environments, a strong validation point that often gets overlooked by day traders focused on the ticker's daily swing. The long-term past performance, however, shows that this company has been reporting losses and facing delisting risks for some time, making the path to sustained profitability the ultimate challenge. Future outlook, catalysts, and risks. Looking ahead, the outlook for BIOKYI is framed by a few key catalysts and significant risks. The central opportunity remains the secular shift to passwordless authentication, driven by escalating cyber threats. The company's focus on identity-bound biometrics directly addresses the most vulnerable link in the security chain, the password. Further, their platform modernization and deployment improvements for PortalGuard IDaaS, targeted for release in Q4 2025, represent a major potential catalyst. A significantly improved, more scalable, and easier-to-deploy platform could dramatically accelerate SaaS adoption and allow the company to more effectively compete against larger, more established players. Traction in the EMEA market, following the strategic termination of a lower-margin distribution agreement, is a critical opportunity to demonstrate organic, high-margin software growth. The defense and financial services sectors, where they're seeing growing interest, demand the highest levels of security, and successful, high-profile deployments here would act as powerful case studies that often get overlooked by day traders focused on the ticker's daily swing. The long-term past performance, however, shows that this company has been reporting losses and facing delisting risks for some time, making the path to sustained profitability the ultimate challenge. Future outlook, catalysts, and risks. Looking ahead, the outlook for BIOKYI is framed by a few key catalysts and significant risks. The central opportunity remains the secular shift to passwordless authentication, driven by escalating cyber threats. The company's focus on identity-bound biometrics directly addresses the most vulnerable link in the security chain, the password. Further, their platform modernization and deployment improvements for PortalGuard IDaaS, targeted for release in Q4 2025, represent a major potential catalyst. A significantly improved, more scalable, and easier-to-deploy platform could dramatically accelerate SaaS adoption and allow the company to more effectively compete against larger, more established players. Traction in the EMEA market, following the strategic termination of a lower-margin distribution agreement, is a critical opportunity to demonstrate organic, high-margin software growth. The